I said it before and I will repeat it. Without the Chinese, without China, there's no US bull market. Hey everyone, this is JR from the Market Surveillance Alliance, and today I want to bring the chart of the day. Now remember, everyone's going to chase now China. People, I've been talking to our members at MSA about this for months, and I repeated, I think way back from, I probably think September, when actually we got Alibaba, ticker BABA, around 65, 66. And it's not that we just cut the bottom at the time. It's just we were in accumulation all the way from probably 85. I think that was my first entry when it comes to Alibaba. I don't like the company, but I think when you look at China and you look at as well at Southeast Asia, I think definitely it's an opportunity that you have to pay attention to. So what's going to happen next? Now, everyone in America, everyone in Europe now, they're just going to pop and wake up and look at China. So you want to pay attention now. The chart in front of me, it's BEKE. I don't know what they do, but I do think this is a beautiful chart looking into. This is my 200 exponential moving average right there. Now, pay attention because this is what Paul Tudor Jones, an American investor and super hedge fund manager, I think he's from Memphis, and now he lives in Switzerland. Now, the most important you pay attention is that 1, 2, 3, 4, 5, 6, 7, 8. About 8 times, you can see how it is being threatening to break to the upside these that particular moving average, which on daily, Paul Tudor Jones, and he's one of the best, he said basically, if you want to save yourself $100,000 and the whole thing of going to university to get an MBA, just learn to trade when prices are above the 200 exponential moving average. So that's what I'm going to do. I look for the break. And of course, you're in the house of options, very basic strategies. I only buy options. I buy a call or I buy a put option. That's it. So I already have quote media, which I use to give you a little bit of guidance. Now, I'm going to look first, my first option, and all that information will be in the description of this video so you can follow up when you're listening. There's always something that we will learn. Now, always remember to manage your risk because past performance does not indicate future performance. We have a deal. All right, good. Be an adult, be self-conscious, and be responsible. Right now, looking at this, I will say the following. Look at what happened yesterday. Volume kicking in on the strike. That's what we expect in the future. Remember, at this point, the price of the stock is trading at $16.26. Went up yesterday 9.79%. Alibaba went up 12%. For the love of God, that thing was huge. So now, if we pay attention what's happening here, open interest, almost 2,000 contracts. So you have a lot of action here. Now, I'm going to take a little bit of more time. It's time as an asset, not your enemy. Now, remember what happening is a lot of retail, they go for the short term. They go to weekly calls. Now, if you make money, fantastic. That's why you can see a lot of tweet guys tweeting like, oh, man, I made 4,000, 3,000%. It happens. It's real. That happens a lot on the SPX. 0 DTE, 0 days to expiration. But the reality is that you have to be pretty fast to command that asset, SPX. Okay, I will talk more about that in our future videos. Now, look at this area. Take the 20. Okay, I'm going to take the 20, and I can take 2 contracts that probably go for $100. Now, the most important, I want to make sure I don't pay more than 70 cents. That will be $70 per contract because remember, one options contract equals 100 shares. So whatever you see here, multiply that by 100. Now, the most important, look why I want this, because I study the relationship between volume and open interest. That doesn't mean you're going to win. That means that there's a little bit of something that you want to pay attention to. So look at this, 1,574 contracts, but since suddenly there's only 492 contracts here. Why is that? Now, I'm buying time. So I'm buying more than 30 days, 45 days. I'm trying to reduce the gambling and looking for more that is something more robust that will have, that is actually moving the odds in my favor. Okay, so that's great. And I'm going to take this trade. This is one I will say that I will go with no more than $500. Think about that in Mexico. In Mexico, the monthly salary, the minimum wage is about $350 per month. Think about that for a second. So a little bit more than the minimum wage in Mexico, or you can actually look at the minimum wage in New York. I don't know, I think it's what, $7.50 an hour? I'm not sure. You have to let me know in the comments if you want to. So we'll look to pay no more than 70 cents. The lower you get it, the better. Now, this is a fairly new contract. This is something else that I look into. That means that it indicates to me, my perspective, when I see this, you see that there's no history here. It means someone is actually playing the line. It's like gambling in Vegas. Someone is creating the line for people to bet more upside on BEKE. This is I'm pretty sure it's a Chinese name, right? I don't want to make mistakes. Let me just look into that. Let's double check, make sure that you're getting right there. KE Holdings. I think it's real estate in China, which you may think is crumbling. Yeah, China, right there. Shares float 877. I think it's actually close to what NEO has. That makes sense. So that's very good. So this is my trade. $500 on this one. That's almost a little bit more than the minimum wage, monthly minimum wage in Mexico, which is $3.50. If you're Mexican, if you're watching this, let me know what it is if you're in Mexico, okay? Just to have a benchmark, because that's what I'm going to do in 2023. Now, finally, short-term solutions. We're looking at the structure. I'm looking at the 20. I don't think this will happen. So I will go more for the 750, for January 20. That's what we call, that's actually the expiration. Now, pay attention, this one, because it's short-term. You have less time. That means that it's against you, but still you can gambling with this. If you want, you can actually parlay any other place that you have. And I will say that I will go also for fine. Look at how explosive that was, 210%. Now, the contract high was $10. If there is this momo mania, the Chinese FOMO, fears of missing out in China, that absolutely you want to crush this one. You want to make sure you don't pay more, probably pay no more than 60 if you can. I actually think it's the same. Pay no more than 70 cents. Now, pay attention that even at 70, it was 160. You can potentially make before January 20, potentially you can make 100% of your money. I will actually bet that this can double. And right now, China is hot. This is the chart of the day. BEKE. It's a real estate company in China. The Chinese, China, they're gonna put everything they want. And Xi Jinping, my man Xi Jinping, is gonna give it all. And make sure, continue watching China. I don't know, when someone actually says it's not something you can invest, I want to double check. That's what I did for our members, the MSA Community Market Surveillance Alliance. We were watching, we were exactly tracking everything the big boys in Wall Street were doing, because at the end of the day, someone always knows. I see you in the next video. Ciao.